Business and Banking Dialogue. Hello, it's Monday, and we have lined up the best of speakers this week for you. It's a good, warm Monday in Mumbai. Welcome to all my participants across EPS channels in YouTube, Twitter, LinkedIn, Facebook. And this is your one-stop shop, a show which gives you incisive analysis on a topic of interest from the world of finance and payments. I'm KK, your host and moderator. Today's topic of discussion will be tracing the trajectory of payments. Let me repeat that again, tracing the trajectory of payments. So we're going to talk about payments as a topic of interest. And to discuss about this topic, please welcome me please join me in welcoming Mr. M.N. Srinivasu. So Srinivasu, you will see his profile on the screen right now. Vasu is a director. Vasu is what he's called as. He's a director and co-founder of BillDesk, India's largest electronic payments service platform. Established in early 2000, BillDesk delivers and manages a range of specialized electronic payments, remittances, and gateway solutions for various markets. BillDesk is a partner of India's largest institutions, and its extensive processing network is used by over 60 large institutions. Prior to co-founding BillDesk, Vasu excelled in finance and gathered over a decade of experience working with companies like Anderson Consulting, ITC Limited, and ITC Zenica Limited. Vasu holds a PGDM from IIM Ahmedabad. So, ladies and gentlemen, Google's decision to invest 10 billion in India over the next 5 to 7 years reflects an immense potential of the country's digital economy. It is all the most significant, please note that it's all the most significant that such a decision has been made during tough economic times in the wake of coronavirus pandemic. When everything looks gloomy, here we have Google, who is committed to invest $10 billion. This speaks volume about the digital push that's happening in India. This, ladies and gentlemen, is a significant development in India's digital push. For the last 1 year, there has been a concerted move by the Indian government to make the country cashless and promote digital modes of payment and commercial transactions. Indeed, the demonetization, or some people call it the demo or exercise, was billed as a fight against corruption and blank money, as it was for the push to make India a digital India. And that's really has given us a lot of impetus to the digital acceleration of payments. So let's talk to Vasu. Vasu, good afternoon and welcome to the Business and Banking Dialogue Show.
Good afternoon, KK. And a pleasure to be here.
Yes, pleasure to reconnect with you after many years. And so let's get going. And ladies and gentlemen, it's going to be 1 hour of good information that you will get on payments. Many of you all are payment experts by itself, so it's going to be a great thing. Given that India's digital push is accelerating, can you touch upon the nexus of forces or the forces that have radically changed the payments landscape in India after demo? Also, do tell the audience, would appreciate if you could tell what are the economic indicators that illustrated the growth in digital payments in the aftermath of demonetization or demo.
Right. Thank you once again for having me on the show. As you said, I think the demonetization was a key point of inflection when one looks at digital payments in India. But it's perhaps important to look back at the journey of entire digital payments in India to understand what role demo played or did not play. So I'll spend a couple of minutes on tracing that growth of what all has happened in India. Digital payments, electronic payments in India, I think is roughly about a 20-year journey. Early 90s was when banks, ATMs took off and banks started issuing cards. But in one sense, it's after kind of the internet infrastructure started getting available in the late 90s. around year 2000 is one way to think of it as a benchmark year when digital payments started happening. Tracking digital payments for a couple of things. The first and the most important thing, and I stress that because that continues to be the most important thing, was the fact that around 2000, banks in India decided to kind of shift from branch-based banking into core banking kind of solutions, and they started investing into those banking solutions. That somewhere lay the foundation for everything that has happened since then. A couple of things that happened. First was banks beefed up the infrastructure, started beefing up on infrastructure that was on ATMs and ATM switches. The banks invested into core banking solutions, which came with the internet banking interface on top of it. Critical part of the journey because unlike other parts of the world, if you look back at how Indian digital payments have grown, in most other countries, it's typically been a journey which starts with credit card, at some point debit card, and pretty much stays on the card side of the business. It happens with customers using it at shops in an offline sense, and then maybe on e-commerce channels. And typically e-commerce in the early 2000s across the world was about buying goods and services. In India, what was different in this journey is, around 2000, when I said the journey started for India as a whole, card penetration wasn't very high. There were less than about a million active credit cards, if at all, and debit cards were primarily seen as ATM cash withdrawal cards. So internet banking that came in, which banks started introducing, became a pivotal point in how people started looking at digital payments. And it served two purposes. One, banks which had invested tons of money into core banking and internet banking solutions found it useful to advertise to clients because they wanted customers to adopt the channel. And while the channel lent itself very easily to account statement and viewing of accounts, transactions became a great way to make sure customers could come back. So for a large part of the journey, if I break the journey between 2000 2015, that 15-year period, growth continued, or growth happened in digital payments linked to how banks promoted digital banking and periphery services around it. There was a natural growth to debit cards and credit cards. There's a lot of education done by banks and the Reserve Bank of India, changing the focus of a debit card from just being a cash withdrawal tool to one that could be used for transactions. And there is a way growth happened, and growth happened multiple factors in the period in 2015, driving it, which included changing customer profile, many more shops and merchants accepting debit cards, many more online propositions coming up, lots of players coming in to facilitate digital payments. All these helped digital payments grow in that period. I think along the way, regulation also came in terms of how payments could be looked at, and this started shaping the landscape of what would happen. Just prior to demo, I think one or two interesting innovations started happening, which was about, one was wallets had gotten introduced into the Indian market. There have been many wallets which came and kind of survived, went, etc. But I think Paytm was, as a wallet, started gaining attention for the kind of propositions offered customers. It was against this background that when demo happened, I think, as we all know, demo happened for a different set of reasons, and the boost to digital was not the primary focus, but an ancillary benefit that happened to the marketplace. And singularly, I think one event one does need to kind of acknowledge is that in that time, in that space, Paytm as a singular brand took advantage of that to kind of leverage the demo moment as a wallet moment, as a moment where people needed to shift to wallets. And what it did for the market was brought to the forefront of their consciousness, saying there is a way to digitally transact. So there were a set of customers who were anyway digitally transacting, but this highlighted to a set of people who had never digitally transacted that there was a way to transact. You didn't have to touch your bank account or your card account. You could use something called a wallet. It played on the fear of people's minds, saying there is a way, this node has got demonetized, something under scrutiny, wallet is a safer method. A host of things went into bringing that to the consciousness. In the short period of demonetizing, those 1-2 months when it lasted, I think people increased the usage of card. I think what people miss out in this entire period is the biggest beneficiary in the 2-3 months following demonetization were actually the Indian banks. The spurt in debit card volumes was a phenomenal one. Because ATM cash withdrawal had become tough, people started using debit card. And I think if I were to pick one big thing that happened from demo in a digital sense, it is that many people started using the debit card as a payment method or a tool of transacting.
Yeah. Okay.
Couple of course, players like Paytm and other wallets gained in terms of number of customers downloading their app and starting using it. But that was about, I would say that's the first big point. And if you just look at what happened in those months between December to the next March or the following year, debit cards kind of usage went through the roof. It saw a spurt in growth. That was one key factor. A second factor that was very visible was growth started coming from tier 2 and tier 3 towns. It was not just the top 6, 7 metros. That was a very significant thing that happened. It deepened the market. It was very visible in the way when banks ran their loyalty programs. The loyalty program saw a huge spurt. Customer adoption went up because it worked very well for them. They were being asked to use a new method. There was a loyalty trigger for it. There were points being awarded. It worked very well for the new customers who were coming in. And you break the customer profile into 2 broad segments. One is, let's say, the slightly older generation who are a little wary of digital frauds, digital transactions, who believe in, who kind of aware of those risks and have a point of view on it, versus, let's say, the younger generation. Around 2017, the market catered to both. Banks pushed debit cards, top of it, loyalty programs, and it worked well for the employed, slightly older generation person. And you had a host of wallets which gave huge amount of rewards and cashbacks to the sort of people, and which was exploited largely by the younger age group people. So in a sense, these couple of events came around 2017 to start fueling the digital. If I had to summarize this entire point, I would say that demo worked as a point of inflection, but really the infrastructure the banks had built over the past 15 years that actually helped. Simply put, even to use the wallet in those days, you first had to top up the wallet using banking infrastructure. You used either a card or a net banking to top up your wallet, then you could use the wallet. So the primary, I think that was the primary outcome of it that we saw.
Excellent. Thanks, Vasu. I think that's a comprehensive coverage of how payments and digital payments got into acceleration. While we did talk about Debo as perhaps a point of inflection where it really began, but actually, that's definitely a factor. But I think, like was said, the internet, the core banking, the mandate that core banking should be there in every bank, regulations, wallet, and the spurt in debit cards usage. I think that these all have contributed significantly. And, we are like one of the top countries in the world with digital payments. So Vasu, India is regarded as one of the leading payments ecosystems in the world, operating perhaps one of the largest real-time payment systems in the world. What are the imperatives for the payments ecosystem in India to realize the goal of 1 billion transaction by 2025?
I think that's a very valid point you made. And maybe I should have highlighted earlier. I think India not only operates one of the world's largest retail payment systems. I think what goes unnoticed is RBI's 2 products, NEFT and RTGS, which have been now there for almost 15, 20 odd years. And I think among the first most robust products anywhere in the world. I think even today, most countries do not allow large value transactions going in real time the way RTGS enables it. So India has had an extremely strong backbone in a regulatory sense, both in terms of RTGS and NEFT as 2 specific products. It's a different matter that market didn't leverage it too much. Corporates used it for vendor payments and others, but it had 2 different specific aspects, right? It introduced the concept that you could do real-time payments. Real-time really meant real-time, not a batch-based processing at some level. And second, the most amazing thing was the price at which RTGS and NEFT were available in the Indian market. Lower than any other price point that is there for any other payment in the world. When we now look at what's going to boost payments, one needs to understand what is this goal? Why 1 billion payments a day? How has it been arrived at? So a bit of perspective on that. I think post demo, Indian market, government, finance ministry, RBI all realized that digital was on a strong growth wicket. And it's important to put milestones to it to kind of measure growth and see what else needed to be done. So somewhere over the last 2-3 years, finance ministry started putting out targets for banks, saying we need you to get to so many digital transactions, do whatever you need to. It started kind of indicating broad metrics to market to say, we want to aspire to these kind of numbers. And I think in this journey, one of the important things to talk of is one of the things that happened in demo time was UPI as a product that was somewhere slumbering in the background at that point, not yet live. Applications were being tested, got a big boost with the government insisting that the Beam app be launched as a way to enable people to transact. So I think January of 2017 is when it got launched as in some sense, the Beam. It has undergone a bit of a transformation from then in terms of the way UPI itself works or the who drives it. But that was one of the significant outcomes of the demo period. And as transactions on UPI started growing is where this concept of putting a number to the number of transactions came in. I say that because even earlier, prior to that, over many years, RBI has always been tracking the retail payment transaction, digital transactions, and putting it out monthly basis, right? Split across ATM, debit card, credit cards. Those numbers always tended to be very high in terms of value and not in terms of count of numbers. So you could have a single RTS transacting happening for 100 crores. So the value always beat the numbers. When UPI came, a very curious trend was noticed in the Indian market, which is still kind of unexplained even to date, that people started transacting for peer-to-peer transfers. I need to give you 500 rupees. I'm transferring that to UPI. I need to give somebody else a smaller amount of money. Now, those payments typically were in the nature of personal payments. Either people borrowed, were giving it, either gifting it, or to a certain extent, personal payments in the nature of how you pay help at home or a cook at home or a driver. Some of these transactions started coming onto UPI. It came in primarily because in a pyramid sense, if you think of it as a pyramid and mid and slightly below the mid levels of pyramid, due to the focus of the government then on getting everybody to open a bank account, Indian banks had gone on overdrive to make sure that anybody who walked outside the branch was kind of caught to be given a bank account and was given. So we had a huge degree of bank accounts getting open, which meant people who weren't very familiar or comfortable banking had an account to begin with. And then it became easier for people who they were working with to transfer money. So in offices, organizers started remitting money to the office boys and the courier boys into the bank accounts. At households, people started remitting money into the house help's bank account. And therefore, these nature of personal payments grew. And if you look at between 2017 to 20, data reporting as it continues, as a single payment product, the most significant growth has been seen in UPI. If you look at other digital payment methods, they've all grown. They've all grown very robustly, 30, 40, 50%. And they may perhaps have grown at those numbers with or without demo. It's my view that they would have perhaps grown because there is a way market is changing, demographics changing. You had a lot of things happening in the environment. 2015, for example, you didn't have a robust ecosystem, which let's say had a Flipkart, an Amazon, or a Swiggy, or a Ola, or a Uber. All these also happened in the last 4 or 5 years. There were many more use cases why customers found it easier to transact digitally. But despite all that, if you were to look at it, the number of transaction UPI has been the runaway number, right? Going from zero to zero in a month as of December 2016 to over almost 1.5 billion today. That's the big jump. As I said, the curious part is a majority of these, about 80% or over 80% of these transactions happen on a peer-to-peer basis. These are not people paying to merchants or shops. These are people paying others. So one question for which I don't have an answer, should anybody ask or should you ask? What were these 1.2 billion transacting people doing prior to UPI? How were they paying money? I mean, cash is not the answer, but somewhere they were transacting and they all decided to use UPI suddenly. That was a big boost. And I think as those numbers started getting put out, I think it became impressive for both government and RBI to put targets to these numbers. The nation has a large number. It has gone from some 8 billion as a target to 20 billion to 25 to 40 billion. I think now everybody's comfortable talking of 1 billion a day as a good target to be achieved by a certain day. Now, what does it take to drive that? And I think fundamentally the two things. I would actually ask the question, where should that come from? India, I think, will very easily cross that billion a day target by 2025 or 26, just purely on this personal transaction. I don't see a doubt in that, right? I think what would be an interesting benchmark to see is how many of the larger value payments, the merchant payments start moving. It's likely to happen. If I, as an individual, start using UPI or any other payment transfer method to make my daily payments, it's likely that as it becomes a habit and I'll start using it.
Yeah.
But the only caution I would add is the last 2-3 years also, that habit change has been as per past trend. It has not been dramatic. So if we were to reclassify the targets excluding P2P transactions, then yes, I think a billion is a dream. That's not going to happen. And there are many other reasons for that, but purely on third-party led payments, if you saw a billion as a day target, I don't think we're going to get there even by 2025. But include P2P, it will.
Okay. But you did mention about transactions and solve P2P. But if you were to look at, from what you were saying, I said, let me look at myself. I have been paying, like you, me, everybody, whoever is there in this show today, they have all been paying to their maids and laundry and, car washing and many other things, small money. And, but also to chemists and other purchases. We all have switched over to digital. I mean, there isn't any money that I'm paying actually, even to the car washer as a cash. He says, no, paid by Paytm or paid by something else. So, when we say that, this is not going to be achieved, even if it is even on payments, just on merchant payments, I think there is a little bit of doubt on that. I think everybody has switched over. Maybe in the cities, but maybe in tier 2 towns, not yet. But that switchover has happened, And so let's see. I mean, since you're so confident that 1 billion a day by 2025 will happen with P2P, that's itself is a great boost, I guess. Okay, even with P2P and the P2P will also kick in because the P2P has already started working. So I'm sure that will help us in the journey of 1 billion by 2025. We look forward to it. Vasu, you talked about Demo giving a boost to the fintech companies, right? I mean, the entire digital push has perhaps happened also because many of the fintech companies, big and small, have kind of given out various apps and systems by which we can do transactions. So which were the breakout fintech segments, and how do these breakout segments rewrite the rules of the game in their respective operating spaces? A good example, like your own organization, also would be a great thing that the audience would love to hear.
Yes, I think there are two things. Again, focusing just on the last 3-4 years.
Yeah.
From a customer perspective, two things happened. One, as I said, ability to receive money. As you said, the house help could be receiving money digitally. The second was the government initiatives around the direct benefit transfers, which meant that somewhere in the pyramid, most people started getting money into the bank account. So it became easier to transact out of a bank account digitally than to withdraw cash into. It just became this. Looking at what was happening, I think fintechs in India looked at a couple of things. There are two ways. One, people who are looking at regulated spaces, one, the unregulated spaces. A lot of fintech activity went around app development, helping other organizations leverage these, building convenient overlays over how a DBT could happen or AEPS was happening, right?
Yeah. Or
how UPI could get used. A lot of fintech attention and interest went there. While we will talk about the big developments there, I think as categories, clearly wallets as a category went up in the perception of people. But segment-wise, what it also did was it segregated it to almost an exclusive player Paytm, because it became, what changed in that point was consumers were got attuned to a behavior which said, use digital payment methods and you'll get rewarded. And the reward started going up. This was the first fundamental change that happened, a shift that happened, saying you will get rewarded for in cash and not just in a deferred gratification, but an instant gratification of cash back or an additional value on the transaction was given. So within the segments, I think the wallets, they would definitely gain, but I would say it got restricted from just in the initial days to just one player, because it just meant a lot of cash burn and there weren't really any other strong players. This is one segment. Other segments of fintech that looked at it, one of the tech and the app side development to say, how do I help banks and others kind of build overlays was one aspect. But seeded, in all that, what got seeded was another business, which was digital lending.
Yeah.
We'll perhaps see offshoots of that in the next 1-2 years, but around the same time, from a fintech industry perspective, the thought that went around was, if people are happy to transact digitally, pay each other digitally, it just opens up a wide new market where people can also borrow digitally and repay digitally, which meant the moment you're borrowing and repaying digitally, you no longer are following the traditional processes of a credit appraisal or how you get evaluated for a loan. So the most significant work, I would say, over the last 2-3 years within the fintech space that's happened, given the digital growth, is in the area of lending. It has its pluses and minuses. There are, just to put a number, there are over 300 odd fintech startups to nascent companies working in digital lending. Now, bankers on this show will all know how difficult a game that is. It's easy to start off, but difficult to scale. So I think we'll have to wait to see how that grows. But I think the important part is there's a lot of tech innovation that's going around in that space. And while some companies will make it big, some will not survive, what will definitely come out of it is a market innovation, say consumers can borrow easily and repay easily. And to an extent that banks leverage these technologies, it can work to their benefit as opposed to being in the fintech and startup world.
Excellent, Vasu. Thank you. Thank you for that explanation. So, ladies and gentlemen, this is getting interesting. The talk on payments and how the payments trajectory in India has been going leaps and bounds, if I may say so. And there are various factors that have happened, and they will always keep playing. Even the current pandemic, if you see, which was never thought about, has also been a contributory factor. It has pushed digital payments much more than what was, even after the aftermath of demo. So there could be many such kind of what we call as black swans, which give problem but also give an opportunity. Okay, so this is the opportunity of the digital push that has happened. So ladies and gentlemen, this is a topic that is uppermost in your mind. I mean, many of you are from the payment industry and lots from the banks. So this is something that is like up your sleeve. You know what is what. You know the problems that your organization is facing or the country is facing. So I'm opening up the Q&A box. Please put in your questions, and you can, I'll take it across to Vasu to answer those questions. If you want to call him directly because you don't want to type, maybe you can ask the question directly to him. You can raise your hand, and the digital team will help you to ask the question. It's up to Vasu to decide whether to answer a question or not. It all depends on, because he's also working. There could be a conflict of interest, so it's up to him. Please note that, my participants. Okay, so let's get going. Vasu, the rapid growth of fintech has caused unbundling of banks. Okay, so like when banks were a closed unit, they're doing everything on their own. Now suddenly they see that they have to collaborate. So fintechs have already taken a chunk of retail payment business from banks, as you know, from abroad. It's already happening. How are banks organizing themselves in this different landscape? Okay. Do you see emergence of new bank payments operating models, a different kind of operating models coming? Because fintechs are kind of there to stay, and banks have to collaborate with them.
Okay, that's a very interesting question because I have a few opinions that are close to my heart. If one is to look at how India is evolving versus how the rest of the world, and therefore maybe draw lessons from that.
Yeah.
One of the key things that's happened in India over the last 3-4 years, again, or even if I take to 5 years, is along with the emergence of fintech, one of the key things that's been happening is the erosion in the value of the payments chain.
Yes.
Right? Which is fairly distinct from the rest of the world.
Yeah.
It's important to pause there for a moment, look at what the world does different.
Yeah.
In the rest of the world, when fintechs introduce new products, whether in partnership or collaboration with banks or not, or independently, they always look at the existing value chain, and then they're able to push, say, here is the incremental value I bring, and therefore this is the incremental margin that I seek, or the value that I seek. And the market either rewards them appropriately for that. So look at any large company which is listed. If you take a PayPal or a Square at the larger end of the spectrum, to any other startup to fintech, everybody has added value and taken, so to speak, the pool of business higher, whether it's revenues, margins. Mm-hmm. India has gone curiously the other way. There has been some degree of regulatory intervention in MDR-led pricing, but most importantly, one of the fallacies with which a lot of fintech startups work, and is important to note it because it impacts the way they can think of partnering with banks. One of the fallacies that many fintechs work with is to say that a fintech business is like an e-commerce business, that you can first buy customer loyalty and scale by burning money, and at scale you can kind of reverse the unit economics to start making money. Mm-hmm.
Interesting.
The fallacy lies there in the sense that one is to understand it's a regulated play, right? At scale you get regulated. It's not so easy to change it the way you think it's possible. Second, unlike any other e-commerce thing where the customer has gotten used to, let's say, doing a recharge online. I'll take recharge as an example. 4 years ago, a customer who did recharge by going to a shop started, let's say, using an online recharge tool because he got a 50 rupee cashback. Today, if you withdraw the cashback incentive, he's still likely to do the recharge online. It's a behavior change.
Yeah.
But in payments, when you, as a fintech, you start working with a bank or a merchant ecosystem at a discounted price, it's very difficult to bring the pricing back, because if you got a merchant used to paying you, let's say, a rupee per transaction, and at scale you go back and say the actual cost is 5 rupees, now you better start paying me 5, he's going to see a 5x increase in his cost base. And no merchant is ever going to do that. Now, this has been important because over the last 2-3 years, a lot of growth in the fintech and partnering with banks has come this way. Banks have held to a certain discipline of pricing, allowed infrastructure access by fintech players who can go use it in whichever manner they want. A lot of them have discounted it, which at some point impacts fintech, but at a larger sense also impacts the value chain. To an extent, therefore, that there's an increased regulation now in the fintech space. And one can imagine that over the next 2 years, the digital payments going, this will largely get a fairly regulated space and a higher discipline will come.
Right.
These two things, therefore, change the way maybe banks will partner with fintech or fintechs partner with banks. One, the more the number of players who are regulated in a better organization in the industry, there's greater comfort to the banking world to partner. You're now dealing, a bank is a very large institution, is held accountable by RBI to a larger set of ecosystem participants, and their comfort with participating and partnering with licensed players starts going up. So one outcome is going to be that as regulation increases, the market will shift in terms of narrowing down to select quality players, and that helps banks collaborate in some models. Banking's own models, will they change or not, is going to be a function of two things. There are a new set of banks called the small finance banks, and there are payments banks. Payments bank can only take deposits. Small finance banks can effectively do most of the things that a regular bank does with respect to customers. I think these two kind of entities might lay a few benchmarks on how banking can grow. And they can be the lessons that emerge out of it. But within the larger banks, I think there are a couple of things I want to say, pluses and minuses. One, just given the situation we are in today with COVID and the way markets are likely to be, the economy is going to be over the next 2-3 years, banks will have a lot on their plate in dealing with the issues as it were, without just focusing on digital, as it is enough on the plate. Second, the pace of change in technology is going to accelerate after this, because just not India, world over, the focus is going to become digital. Saying, should a thing like this happen again, how does digital help?
Yeah.
The fact that they're going to have a lot on the plate, the fact that pace is going to accelerate is going to force banks to partner more to stay in the game. That's one outcome that will undoubtedly happen. But I think the balance is shifting as to the nature of play. Maybe we can talk about that later, but India, fintech and digital play is no longer about domestic players. and that perhaps is an implication, we can talk about it a little later, that a large part of fintech in terms of transactions, if you look at 1.5 billion UPI transactions today, 85%, 90% come from 3 or 4 players, all of them are foreign entities. So that's one other factor to think of how this will shape a market. So I do see banks partnering a lot more. But if I were to just think for the banks a bit, right, in terms of how could the game have been different over the last 3-4 years to go in the future, it's just more a reflection more than anything else. The strongest asset that the Indian banks had was they had a customer to begin with. And they had a certain scale. They had implemented core banking over many years, which is taking its time to kind of stabilize and help customers come online. But this was the core asset that they had. And Indian customers are not very sticky by definition. They're happy to move very quickly. Having built this asset, I think whichever one thinks of the cause effect for it, UPI evened it out for them. What UPI did was it segregated where people transact and where people hold money. The fact that you could now have a PSP, therefore, just by way of an example, you could download the PSP app from a player like a Google Pay or a Phone Pay, but have your money at an SBI or a BOB or a PNB. It has increasingly distanced the customers from the bank and taken them to where they transact. So to speak, the core asset of the bank, which is a customer, in a way has got socialized now. If I have a better app, I can get the customer to transact with me. So the bank might have spent 10 years building my loyalty, invested money, nurtured me. But just when the digital boom happened, it was time for the bank to kind of reap the benefits of it. That benefit got socialized away from them. I say away from them because nobody prevented the banks from, being forefront of UPI in a big manner. But if you just look back today, three years into UPI, 90% of the transaction happened to 3 or 4, as a private players and not through the Indian banks.
Yeah,
but that's the nature of the game. It's a consumer game on an app level, technology level, and happened over an extremely short period of time. Therefore, winners are going to be those who can have only that area to focus on and nothing more to handle. Given these changes, I think these two important. I think there are lessons from this for the bank, and there are opportunities for fintech. These two will help shape how banks think of it. They now understand both the threat and the opportunity of partnering with fintech. So I think that will shape how they think.
Yeah. So ladies and gentlemen, what I think a very important point also makes is that the customer has always been the core of the bank, right? It is like I own the customer, and that is now he puts it as socialized. Somebody would say that it is getting threatened because no more the customer is like owned by the bank, and that's getting weaned away by the fintech companies. So there is this, I won't say this competition, but there is this co-option, as we call it, where fintechs and banks can kind of work together and perhaps see a different customer experience for all of us. At the end, we want a different customer experience, and hopefully we'll get that. Also, I talked about questions that will come your way. One will be chat or could be audio. So we have the first audio question coming your way. It's coming from a gentleman called Chittaranjan Chattopadhyay. Mr. Chattopadhyay, could you unmute yourself and introduce and ask your question?
Thank you. This is my second occasion that I'm actually attending this sort of program here. And yes, I'm really grateful that Mr. Vasu has raised certain very pertinent issues. Yes. Having worked in the bank for the last 38 years, whatever discussions now I'm hearing, in fact, I was delving upon my experience from the village level, rural level, semi-urban level, urban level, city level, metro level. All these levels I have worked. So naturally, I can have some introspection with Mr. Basu. The digital payment system, first thing is that when it came from the manual banking, when it's just simply, it has migrated from manual banking to ultimately the digital banking when it took place. In fact, the core banking solution, what he has talked about, of course, this core banking solution has helped a lot. But one thing I'm telling you, the psychology of the people, that should be also, I think, a point of discussions. I'll be just taking 2 minutes to discuss on digital payment, digital receipt, and digital, as Mr. Basu has just a very important issue on the digital finance. The financing is done by the digital process. The first of all, in digital payment system, the generally has been understood that cybersecurity is one of the most critical challenges faced by the stakeholders of the digital payment ecosystem. With more and more users preferring digital payments, the chances of getting exposed to cybersecurity risks, such as online fraud, suppose information theft and malware or virus attacks are also increasing. And this is the common psychology of the people, that the village people, once they're getting any informations from the various agencies, ultimately the progress of the digital is being hindered in this village level. In fact, this, what you were talking about, the demonetization, of course, it has enhanced the probability of getting much more digitized, environment, of course, but this situation is there. I think this is one of the important points I want to hear from Mr. Basu, that how we are getting prepared ourselves just to reach the target of 2025, 1 billion accounts or like that. Another issue is that I want to know from you, digital finance, how it will take care of the qualitative aspects, which is the non-financial aspects of any sort of, due diligence to be done for any entrepreneur or for any person who will be asking for finance, how it will be taken care of, which is done only possible through the physical interactions and others. This is number 2. And number 3 is that digital receipt, how this would be, this would be, it would be much more rapid. It can be done so that people can put it in the digital receipt they can do. I think banks are yet to have their infrastructure for this digital receipt, etc. Because the cash which has been put into the account, that is still people are thronging in the village level and everywhere. You'll be lying queue in this post-COVID-19 situation. This is going to be, stupendous task for the bankers also. So I just want to get these discussions from Mr. Basu. Thank you.
Very interesting question, Mr. Chaturvedi. I'll try my best to answer them. I think the first aspect you raised helps me also address one part that KK just summarized in the previous. With respect to security and the lending, right?
Yes.
I will amplify why I use the word socialize in the earlier context. What has happened now in the and I'm just a couple of products. I'm taking UPI because that's the most top of the mind for people. So what has happened in the payments now is, I as a customer transact at, let us say, Google Pay, Phone Pay, wherever. That's my transacting point. But I still seek the security of my account with the bank. What it does is, the cost of maintaining my comfort, my security, is still with the bank. The risk of managing it is that. So if I were to complain today of an account compromise, RBI regulations force the bank to operate in a certain manner. That if I complain within 24 hours, the bank has to put a hold on it and reverse transaction, whichever type. So I, as a customer, today have the best of both worlds. I am utilizing the benefit of the banking system to say, I'm going to rely on an SBI, BOB, whichever bank, to say, that's where my money lies, that's very secure. But I'm going to transact a different front end because that's where I get the benefit. This, unfortunately, is going to also mean over a longer period of time, value that the customer generates will start flowing the front end way, right? And the bank kind of becomes like a locker, a digital locker where you're keeping the money. This has an important implication on where security needs to be built. Unlike 3-4 years ago, when the belief was it's the cards and the banks that become the primary way to transact, what this has shown is the way Indian market has evolved is transacting points are very different from where money is kept, and security will therefore evolve differently. The good part is people who are on the customer side have obviously a good reputation to protect. Nobody wants their platform to be seen as compromised. So one benefit that's going to happen is customer-facing companies are going to keep investing in the customer side of technology and security, and banks will focus on figuring out how to make their access more secure. It's because of the overwhelming interest that many of the front-end players have, whether you think of an e-commerce player like Amazon or a payments player like Google, they are investing today lots more monies with a freer hand than, let's say, banks did in the past to educate customer security. It's obviously a habit thing and it will take its time, but that's the positive development that's happened. This in turn leads to the aspect of what you said, digital lending and receipts. I'll give an analogy. 1 or 2 generations ago, people wouldn't have readily shared pictures of their family or the food they're eating on social media. But current sort of generation or transacting generation, I would call it, have no such compunctions. So the value of a receipt itself will change going forward. It's just an acknowledgement tool. Digital transactions, as long as they're not disputed, it's an end-to-end trade. So the functionality of what in the earlier world the receipt played will now get handled by a digital acknowledgement which works in real time. Lending is a very interesting aspect because, which is what I mentioned earlier, there are lots of players in the game without not necessarily understanding that lending is the first part, tracking repayments and getting it back is the more important second part. So we're going to see a lot of innovation in the first part where the lending happens. People will burn their hands in terms of repayment. But I think out of this, what will happen is two things. Like in any retail play, if you get to a large number of small value lending, then the ability to absorb risks goes higher. You know, you can have X percentage failure that is built into a risk model. Also, technology is increasing by leaps and bounds to be able to track at least the right customer to lend to. There are a lot more metrics available. The chances that you're lending to the right guy who can repay is very high. Within a SME kind of a lending, there's so much data now available because of GST filings that you have a good sense of the cash flows of a customer. So in the past, where one relied only on paper-based presentations of a business or an individual borrowing, now there's a lot of trail data available. So all these will help in mitigating some of these aspects that you raised.
Yep, thank you. Thank you, Mr. Chattopadhyay, for a good question and equally well answered by Vasu. Vasu, there is a query that's coming your way. It's for you to answer or not. It's anonymous, so we don't know who he is. How does BillDesk compare to new age players like Razorpay and Cashfree, etc.?
Yeah, I'll answer that. It would be useful if somebody had identified themselves, but
I know.
It really matters. I think that too. As I said, there are the BillDesk model has been simple. We pioneered what we call the aggregating model, where we brought on banks onto one set of platform and gave the platform to anybody who sought it. Yeah. In the initial phase, it was the merchant. So once we signed up banks, we got them on one platform, then went to merchants, said, here you can use an aggregated platform. Yes. That effectively has caught on as a model, and even today forms the fundamental basis by which everybody transacts. Many of the platforms, including the ones raised in the question, are platforms that leverage BillDesk. Many of them partner with BillDesk to access this network. From BillDesk perspective, our proposition is very simple. We're actually very interested in the digital growth in India. We've been there 20 years. We focused only on India. We've not tried to go out of the country yet. Our focus is how does actually India grow out this digital footprint. So from platform perspective, what we've done is anybody who needs a platform, we give it. So I said merchants was one use case. Over the years, we've had competitors come in to say that I have 10 payment methods, you have 100. Can you give me the balance 90 for me to use on my merchant? We've happily given it. We don't see that as competition because structurally, anything that makes a digital payment world grow, it helps us. So all these, including the players mentioned, are partners for us. Second, we recognize there's a market. India is a very, very large market, needs many players. I mean, you can see that even in large banks itself. We've had for many years 50, 60 banks. So this is not a market that one player can cater to. Much of the competition has emerged in spots which are deemed to be white spaces that we've left, which is fine. We focus on certain segments, and many new players are coming and doing an extraordinarily good job and focusing on segments that we've not worked with. So overall, it grows the pie and it goes off our platform in many cases. So we're happy for it.
Yep, that's great. So before we talked about Vasu, we talked about payments. I want to thank Mr. Anonymous for a good question, but we prefer if you please put in your name, please. Okay, let's not leave it as anonymous because the guest would like to know who's asked the question, and accordingly he may want to change his answer accordingly. Anyway, let's move on. Also, one of the important aspect of any payment is authentication. Okay, that becomes very, very important. Okay. It is said that the authentication is it's very important in a payment system, which I kind of explained. What are your views on the developments that are taking place in India for improved and simplified authentication?
Okay. One, we should quickly take a look at the past to see what's India done different. And I think one of the very critical, important things that was done different was the introduction of the second factor of authentication. RBI mandated a use of second factor for any pure digital transaction as a way of ensuring security. When it was introduced, it was much debated. Many people did not like it. I personally think it's one of the best things that happened because it reduced frauds, as it were. Frauds had what to do as the market was growing. It had an important role to play. And it's never been a big issue for a customer. Customers have always put a second pin wherever it is needed. So this is just about putting a pin. So the journey, I think what the Indian customers have gotten used to the fact is saying, other than the credentials on a payment method, you're using the second factor of authentication as a way to authenticate. The fact that RBI insisted this always be there has also helped innovation. So if you look at some of the new apps, because RBI specification of second factor was never that it needs to be a PIN issued by the network or a card or anything. It just said that if Vasu's card is getting used, there needs to be a factor that helps us better identify him or uniquely binds him.
Right. So
many of the new apps revolve around the second factor being my phone, for example, which really means it removes the friction of me entering the second PIN or whatever. As long as an app that's binded with my phone, it can get used. So world over, I think that will also become the standard. Many other economies have taken a learning from the Indian second factor to say that's an important way to manage customer security and reduce also fraud risk for merchants.
Yes.
With improvements in technology and transactions happening a lot more from personal devices, whether it's a laptop or phone, it's far more easier to now identify. As long as I'm transacting on the same phone or laptop, technology can identify it's a fairly safe transaction. Important. I do think it's important. It's not a big deal for a customer to put in a second factor to ensure the security. And once it becomes a habit, which is the case it is, it works very well. So I think that's been a big boon from this factor. Changing technology is enabling the second factor to be something other than what is issued as a second pin on the card. It could be anything that's known only to me. Typically, it tends to be a device parameter.
Yeah.
So overall, that will go making more secure transactions. And if you're kind of blue sky and see 5-7 years later, when we can think of, automatic orders being dialed out like by your fridge every time your groceries in the fridge are consumed. Device ID of the fridge will the refrigerator will become the second factor that authenticates. So what is the factor of authentication will keep changing, and people will constantly innovate to make it easier, simpler. But it helps transact better.
Okay. Thanks, Vasu. I think we will dive into further on to in whatever time we have into authentication. But before that, let me take another question. It's coming to you directly from Harish Prabhu. Harish is a very, very experienced banker. He's a very regular in our show and asks very good questions. So Harish, can you please unmute yourself and ask a good question?
Hi, Vasu. Hi.
Yeah, hi.
Hi. Firstly, congratulations for building, to be honest with you, for the first ever fintech, right? I mean, because I don't think there was any other fintech prior to you since the days of the EBP and the EBPP came in, right? So you have since you have such a deep insight into the fintech domain, as well as actually dealing with the banks, right? And seeing the transformation of the banks, and everybody is writing the sort of obituary of most of the banks, right? I mean, going forward basis. So at the hands of the fintech. So what is your sort of advice for banks, in order for them to say, fight back, survive, or whatever?
Interesting question, Harish. I do think many things are relevant here. First, the whole current situation, right, just lends a huge leg up to digital itself, and of which digital transaction obviously becomes an important point. So I think as we all, as a world, get out of this mostly lockdown mode post-pandemic and reevaluate, a lot will depend on how banks and non-banks and fintechs and corporates around the world react to these opportunities, what they will. So we could just see completely new set of players kind of entering the payment space because now they understand that to be an extremely critical part. I keep that aside because that's blue sky. One doesn't know how it will happen. But looking at India market, I think the second factor to consider is it's always been, India has been more an attractive destination for global play, and global play is important too in the context of digital payment. Given current, I think, tensions with China, the appeal of India as a country for investments just goes up. Now, these two are important factors in my mind to think of what can happen in India over the next 2-3 years, and in terms of how will banks cope or how will banks react to it. First thing is, fintech for, in the coming 3-4 years is not going to be about early stage fintech startup play. I think those days are over. There is space for that business still, where they'll end up building products and technology and kind of sell it away to a bigger player. I think that space is typically going to evolve like it has done in the West. But digital payments play in India over the next 2 years will become a, so to speak, a big boys play. And if you look at Indian market, you already have a whatever name, Amazon, Google, Facebook, Walmart, all in this space. If you'd asked me this question about 2 years ago, I would have said all will be compelled to find models of partnering with banks to see how both win. But a couple of factors that are changing is payments in India has got, as I said, a lot socialized, which makes it easy for non-banks to be able to participate and win the game, which was not a case 3 years ago. So I think it gives options to all the big non-bank players to think of how they want to participate. Second, if you look at all the large non-bank players, I'm talking about the global players, I'm just keeping BillDesk aside for a moment, I just talk about the rest of the market. They are regulated by technology regulators worldwide. So they're not new to regulation. And technology regulation worldwide is almost as tough as financial regulation is getting to be. So from a mindset perspective, if you look at some of the big non-bank players in the space, they're all okay with saying, okay, fine, if it means getting regulated, getting a license, so be it. Right? This is another important factor that's going to play out, that traditionally banks were said, look, finally they can't get into banking without a license, and that's not an area they want to do that. They're a B2C player, they don't want to get in space. I think those barriers are broken. So it will genuinely become a trade-off of negotiation between banks to say, what does the non-bank tech player or whatever bring to the table versus what do I get a bank? There will be big opportunities for partnership, but the game for scale. So I don't see more than 2 or 3 such partnerships working in the Indian market.
Okay.
Thanks a lot, boss.
Thanks, Harish. Also we are at the end of our program, but there are a few queries. So can I hold you back for another 2-3 minutes?
Sure.
Okay. So let's talk about some of the authentication and the usage and all that. So quickly you can answer them. In our program of BBD, wearables was being touted as a next big thing that will happen in payments. What are your thoughts on that?
A little time away, particularly wearables as a thing. But even when it comes, I think RBI has shown itself to be very proactive. So I would not be surprised if very quickly RBI one day said, as long as transaction is sub 100 or 200 rupees, and people will take it, let it be on. Small ticket transactions can happen and can play a big role in various facets of our life.
Yes,
right?
That's
just as an example, transit. If I want to board into something and there's a wearable way of authenticating me, you're removing the friction of how I pay the 50 rupees, 60 rupees, 100 rupees that might be needed for that mechanism there.
So talking of friction, we have this 2FA, that is the two-factor authentication, which brings in some amount of friction, whereas the single-factor authentication, which is there in the US and other places, is that much less. The question is, how can we stay compliant to 2FA, which is a good security feature, while ensuring frictionless payments or invisible payments? Can we do something on this? Or is there some thought going on?
No, so I think one key reason why two-factor versus single-factor is India does not, as of date, currently have an extremely robust judicial process by which customers can go for dispute resolution historically. And therefore, it's been necessary for regulators in various places, whether it's insurance, mutual funds, or finance, to step in to say, I need to protect the consumer. Whereas if you take a market in the US, it's left to market forces. That if you have the proposition of weak on fraud, it can happen. Indian context, I think what is very likely to happen, because RBI has always been very clear that they said a second factor helps, but I'm not dictating what the second factor is. It can be anything that the ecosystem of that particular payment system thinks is appropriate. So just to take your example, wearable transit, nobody will have an issue if it is that ecosystem for that payment operator agrees that a certain device ID is the authenticator, and that will work. Those all will try the invisible payments, as I said, right? The friction goes away because me just crossing the border, the toll line, if I'm wearing a device that has second authenticates just like the card today moves, even a debit can happen the same way.
Okay.
I do see that as a possibility for small value transactions.
Even biometrics, biometrics is a good device, but the cost of infrastructure is high. So why don't they see accelerated development and say something like a voice, or use the mobile phones, which is always with us, or as identification for payments? Or is there some development going on out here?
No, voice technology has always held the most amazing potential. In fact, one of the interesting things that I picked up in some of my conferences was voice is more reliable as a authenticator than even a iris scan, right? And now it obviously depends on who. Somewhat technology pushes a function of some tech interests also. There has to be large scale global play, which is, or a technology robustness, and there need to be anchor players who push this. And India, given ambient noises to a host of things, voice has never been the big favorite. Biometrics in some sense has come in. I do think this will grow, but it also depends now, given these people are now talking of contactless payments, right?
Yes.
I said we're at an interesting point in time to see what technologies get pushed by what economies, what regulators. It's an open field, I would say.
Yes. Yeah, including the tap and go payment, which is so rampant in Singapore and South Korea, has really not picked up, though I think NPCI had launched a pilot, but it's still just not being used for some reason. Okay, just a word on cybersecurity. Is it as important as anything else, or is it still looked at as an expendable item?
In India, what has happened is there are two things. One, because of the 2FA, the merchant has been protected from fraud, right? Okay. Worldwide, normally the merchants are the one who raise Cain and they kind of create a huge noise. That's gone down because 2FA is coming. But it's also meant that the burden of the risk has shifted to the issuer or the bank. And therefore, banks have been investing silently in robust security and helping transactions. Going forward, it's going to be a mix of analytics plus tech tools to identify. It is a given. Every regulator in the world worries about it. As technology improves, so also the ability of the fraudster or the cyber frauds will keep increasing. Any player can only invest in tech and analytics to just kind of mitigate the risk, but it won't go away.
Okay, thanks. Quick query from Tyag. Tyag, can you quickly ask the question? Because we are already run out of time.
Hi, Vasu. It's commendable to see the first India ideas crossing the $1 billion mark among all unicorns. Having said, my question is, payments is all about volume. Payments is all about scale. So going forward, which vertical of payments you see that is volumes and scale? Like, for example, mobility or credit finance or whatever. Where is your bet on, your views?
If it had been purely left to market play, that I would think it would have been mobility in the sense of the Uber Ola kind of mobility and transit. If you left purely to market play. However, Payments India has tended to be regulated, and both government and RBI have been able to dictate certain things. So it just depends. If from tomorrow, as an example, if government said everything about 10,000 rupees, any government payment needs to be paid only digitally, they couldn't have asked for this 3-4 years ago. But today, I think they're in a reasonable position to say any payment to government about 10,000 can happen only digital, no other format. That's the vertical that will take off. So interventions apart, I would have normally said mobility 6 months ago. Given current situation and mobility, I think for the next 1-2 years, I'm not sure about it. But what I'm confident of is it is the small value transactions that will drive it. It will be small value, many transactions, the 50, the 100, the 200 rupee transactions will drive the count. And because they're so small value, the infrastructure or the supporting ecosystem needs to be a very low cost thing, which essentially again means single 1 or 2 large networks using scale to leverage and bring down the cost, not so much as a 10-12 player game.
Yep. Thank you, Vasu. Thank you, Tyag, for a good question. So, ladies and gentlemen, we have come to the end of this today's show. So, just to sign off on this one, I would say that India is witnessing a growth trajectory in digital payments, similar to the rest of the world. I think Vasu did talk about it in detail. In fact, India is expected to be the growth engine by 2025. While fintech and financial institutions from around the world are innovating the fastest ways to make payments. I think what is more crucial is the safety of the payments. Hence, what will determine the success of all the payment options is how secure they are. With these words, I kind of close today's sessions. Please join me in thanking Vasu for coming and talking to us on payments trajectory. I think Vasu, thank you very much for coming. Wonderful talking to you. It was a lot of information you have given us to our participants. And thanks for coming and spending time with us.
Thank you.
Thank you. Thank you very much.